Hey everyone, this is Andy Michael with Seven Springs Wealth Group. It has been a challenging start to the year across all assets, and in these types of years, it can be very challenging to think objectively about your portfolio. At Seven Springs Wealth Group, we have decades of experience navigating our clients through these types of volatile markets, including the financial crisis. But we too are human. We know those and feel those same fight or flight tendencies that our clients do. And so we've developed some tools that we want to share with you today to help us think objectively through these types of volatile market periods. The first tool I want to show you is a big headline that you probably haven't seen in financial media recently, and that is that the 10-year return annualized for the global stock market as of September 29th is 7.5% a year, right near that 8% a year mark. That's through all of the volatility that we saw in 2020, through 2021, and now in 2022. In fact, it's more common for the market to be up double digits or even down compared to being up single digits in any given year. So that brings us to this tool. When you broaden out that time horizon, historically, you smooth out those returns over time. So tool number one, zoom out, broaden your time horizon. Tool number two, have a conversation with your future self. Imagine it's 2027 and you're going to now have a conversation with your 2022 self. Ask yourself, how did the next 5 years play out? Were you glad with the decisions you made in 2022, 5 years into the future in 2027? Flip that question on its head. Have a conversation with your old self from 5, 7, 10 years ago. What would you tell your 2015, 2012 self about how markets would go? I personally would offer these 3 tips. Stay invested. There's going to be a lot of panics and booms, but stay invested throughout the time. Continue to dollar cost average, especially when the future looks bleak. Historically, those end up being the best times to put money to work. And finally, tune out the noise. The market is going to move a lot over these years. Focus on controlling what you can control. That's what I would have told myself from 2015, 2017, or 2012. I think that's what my 2027 self will be telling me today. So tool number 2, think about your future self in these volatile markets. Tool number 3, tell me something good. There's so much negativity going on in the markets right now. It's been a long time since I've seen a positive headline. But the reality is nothing is ever all good or all bad. So when we have that much negativity, the third tool is to just counterbalance that with some good points to make about what's going on in the market. Starting with Buffett's quote, Warren Buffett's quote, be fearful when others are greedy and greedy when others are fearful. And using this chart on the right-hand side from JP Morgan, when consumer confidence is at lows, typically, historically, the market has very good returns the following 12 months. Let's pick on November 2008. That was not the bottom of the financial crisis. So, if you did use this as a timing indicator, a short-term timing indicator, it did not work. However, it ended up being an excellent long-term entry point into the market. In fact, 12 months later from November of 2008, the S&P 500 was up 22%. So when you have that type of negativity into the market, it's often a contrarian indicator that you could see some positivity in the future ahead. Also, markets historically bottom 3 to 6 months before the economy bottoms. Markets are leading indicators. So what that means is when things feel like they can't get any worse, oftentimes that's when you start seeing markets have a bottom. Are we there yet today? I have no idea, but we do still think that relationship exists as it has historically, that the market will typically bottom before the actual economy does. Finally, long-term valuations may look more attractive today than they did in the past. You are now getting more interest on your bonds. Stocks are now cheaper than they were 12 months ago. And so that is a great starting valuation looking out long-term across the next 5, 7, and 10 years. And finally, cash is not trash anymore. You're actually getting a real yield on that cash today compared to what you were getting 9 to 12 months ago. All of those are good things. And so 3 action items today. Number 1, earn a crooked number on your cash. What that means is earn a number greater than 1% interest on your cash. The ways you can do that, You can use a high yield savings account that are paying around 2 to 3% today and should continue rising as interest rates rise. You can buy a treasury bill. A zero coupon treasury bill is a great tool that are now paying around 4% interest. Or you can use one of our favorite Series I savings bonds. They are still paying 9.6% interest as of this video. So again, another great tool to earn high interest on excess cash. Number 2, dollar cost average, dollar cost average, dollar cost average. Again, going back to that future conversation with yourself, these are typically the times that it really makes a lot of sense to continue doing that dollar cost average plan. Even if you put money in today and it goes down next month or even the month after that, when we look back 5 years, 10 years from now, we still think we're going to look back and say these were excellent times to put long-term capital to work. And finally, return to your long-term financial plan. Quantify what this volatility means to me. We can do that. We can pinpoint whether you're on track for your plan, if any adjustments need to be made. So go back to that long-term plan when you're having this type of short-term volatility in the markets. That really helps us to continue to stay grounded in what this actually means for me and my plan. So that's what we had for today. I hope some of those tools can really help you thinking objectively through these volatile markets. If you or someone you know would like to continue that conversation, talk about what it means to your plan, or don't even have a plan, please reach out to us today and we'd love to have that conversation. Thanks for watching and have a great day.